Insurance underwriting is a meticulous process aimed at evaluating the risks associated with insuring an individual or entity. It involves a range of terms and practices that help insurers determine the appropriate terms, premiums, and coverage. Understanding these underwriting definitions can provide insight into how insurance policies are assessed and issued. Adverse selection occurs when individuals with higher than average risk are more likely to seek insurance coverage, while those with lower risk may not. This imbalance can lead to increased claims and higher costs for insurers. To mitigate adverse selection, underwriters use detailed assessments to evaluate applicants' risk profiles and set appropriate premiums. The goal is to balance the risk pool so that it remains sustainable and fair for both the insurer and the policyholders. The applicant is the person who applies for an insurance policy. This individual provides personal, medical, and financial information necessary for the underwriting process. The applicant's details are used by underwriters to assess the risk and determine the terms of the policy. The applicant must provide accurate and complete information to ensure the underwriting process is effective and fair. The application is the formal document completed by the applicant seeking insurance coverage. It includes detailed questions about the applicant's health, lifestyle, occupation, and other relevant factors. The application serves as the primary source of information for underwriters to evaluate risk and make decisions regarding coverage and premiums. Age change refers to the adjustment of an applicant's age as time progresses. Since age is a significant factor in underwriting, insurers may backdate policies to the application date or adjust premiums based on the applicant's current age at the time of policy issuance. Accurate age information is crucial for calculating premiums and determining eligibility for coverage. An attending physician statement, or APS, is a document provided by the applicant's healthcare provider that includes detailed medical information about the applicant's health status. The APS is used by underwriters to obtain an accurate assessment of the applicant's health, verify medical history, and evaluate any potential risks associated with issuing a policy. Backdating refers to the practice of setting the effective date of an insurance policy to an earlier date than the actual application date. This is often done to align the policy's effective date with the applicant's age at the time of application. Backdating can be used to lower premiums or ensure that coverage begins before the policy's formal issuance. A buyer's guide is a document provided to prospective policyholders that outlines essential information about insurance products, including coverage options, premiums, and policy features. It helps consumers make informed decisions by providing a clear understanding of what is being offered and how it meets their needs. A binding receipt is a temporary document issued to the applicant upon submission of the insurance application and initial premium payment. It provides provisional coverage until the policy is formally issued. The binding receipt guarantees that the applicant will be covered for a specified period or until the insurer decides on the application. A conditional receipt is similar to a binding receipt, but provides coverage only under specific conditions. Coverage begins when the applicant meets the conditions outlined in the receipt, such as passing the underwriting process and meeting the insurer's criteria. If the conditions are not met, the conditional receipt does not guarantee coverage. A consumer report is a report generated by a third-party agency that provides information about the applicant's credit history, financial behavior, and other personal data. Insurers use consumer reports to assess the applicant's financial stability and potential risk, which can impact the underwriting decision. A credit report is a detailed record of an applicant's credit history, including their credit score, borrowing habits, and repayment behavior. Insurers may review credit reports as part of the underwriting process to evaluate the applicant's financial responsibility and assess the risk associated with issuing a policy. Decline risk occurs when an insurer decides not to provide coverage to an applicant due to high risk factors or unfavorable underwriting conditions. This decision may be based on medical history, lifestyle choices, or other risk factors that make the applicant unsuitable for coverage under the insurer's guidelines. A disclosure form is a document that requires the applicant to provide accurate and complete information about their health, lifestyle, and other relevant factors. It ensures transparency and helps the insurer obtain a clear understanding of the applicant's risk profile. Failure to disclose accurate information can lead to policy denial or cancellation. The Fair Credit Reporting Act, or FCRA, is a federal law that regulates the collection, use, and dissemination of consumer credit information. It ensures that consumers have access to their credit reports, the right to correct inaccuracies, and protection against unauthorized use of their credit information. Insurers must comply with FCRA requirements when using credit reports in the underwriting process. Evidence of insurability refers to the documentation or information provided by the applicant to demonstrate their eligibility for coverage. This may include medical records, test results, or other relevant data that supports the applicant's health status and risk profile. Providing evidence of insurability helps underwriters assess the applicant's risk and make informed decisions about issuing a policy. Understanding these underwriting definitions helps both applicants and insurance professionals navigate the complexities of the insurance process. Each term plays a critical role in ensuring that policies are issued fairly and accurately, reflecting the true risk and needs of the policyholder. Click on the link in the description below for your free ebook titled Understanding Your Options, and don't forget to subscribe to our channel for more helpful insurance info and tips.